All right, let's just jump right into today's explainer. We're looking at a super vibrant, beach-themed piece of financial commentary from Adani Consultor, and it paints this really fascinating picture of the economic crosswinds we're caught in right now in July 2026. Instead of getting bogged down in, that dense, boring financial jargon, the author uses a highly stylized, honestly almost satirical summer framing to tackle two massive topics dominating the headlines. We're talking about the supposed weakening of global inflation and the sudden, totally surprising resurgence of Bitcoin and the broader crypto market. We're going to unpack all of this to help you figure out exactly what is happening in the markets right now, completely cutting through the noise.
So, right out of the gate, the author poses a really critical question. We are hearing absolutely everywhere that inflation is finally taking a breather, right? But is this macroeconomic shift a genuine turning point? Or are we, everyday people, just being sold a motorcycle with air conditioning? I love that phrase. Basically, is this relief just a deceptive illusion? And maybe even more importantly, why in the world is this specific economic narrative making Bitcoin and other cryptocurrencies suddenly pull their heads above water after literally months of sinking? Well, we need to look at the data through this unique lens to find out.
To really set the scene here, you've got to hear the exact tone the source uses. The piece kicks off with, Ay mi madre mi gente, ponte cómodo en la toalla, en los mercados financieros hay una brisa curiosa, which roughly translates to, oh my goodness, my people, get comfortable on your towel. Out in the financial markets, there's a curious breeze blowing. You see what they're doing? The author is deliberately using this relaxed, conversational tone right from the shoreline. While most people are out there sweating over whether the tide is rising or, their ice cream is melting, the author is telling us to just sit back and analytically observe this strange breeze. It's such a fantastic framing device, and we're going to use it to unpack the current financial tide. Section 1. The Invisible Monster, the Truth About Inflation. Let's start with the macro-level view to understand the broader economic weather before we get into crypto.
The author totally bypasses the usual Wall Street jargon and reframes inflation as an invisible monster. For those of us tracking the markets, the absolutely crucial reminder here is about momentum versus absolute value. Look, when headlines declare that inflation is weakening or slowing down, it absolutely does not mean we're returning to old prices. Not at all. A slowdown simply means prices are still going up, just at a slightly slower pace than they were before. That monster? It is still very much in the room, it's just walking right now, instead of sprinting.
And this example brilliantly illustrates the point. Think about a simple package of coffee. Last year, that invisible monster of inflation meant your coffee cost €2. Today, you're paying almost €3 for that exact same package. Even if the inflation rate drops tomorrow, that coffee is not going back down to €2 anytime soon. It just means it might take a little longer to hit €4. Getting this is so vital because it completely explains why our everyday perception of the economy just clashes so hard with those optimistic headlines we keep reading.
Which brings us to the stark contrast between the two realities we're all currently living in. On one hand, you've got the official version. This is where central banks are basically taking a victory lap, claiming their aggressive interest rate hikes worked, the economy is moderating, and we can all just relax. But then, on the other hand, you have the supermarket reality. If you look at the gas pump, your grocery receipts, your monthly household bills, the pressure on families is still immense. The data coming out of the offices might say things are slowing down, but everyday consumers, we are still feeling the squeeze. To perfectly capture this massive disconnect, the source uses a vividly hilarious and highly memorable analogy. They write that the current economic situation is like going from getting 4 slaps in the face a day down to just 2. I mean, sure, mathematically speaking, you're doing 50% better. But guess what? Your face still hurts. This hits the nail on the head as to why celebrating cooling inflation feels incredibly premature to the average citizen. We are coming from such painfully high levels of inflation that any tiny breather is treated like a massive party by the markets, even while everyday people are still hurting.
Okay, Section 2, the tide turns, Bitcoin's awakening. Let's zoom in a bit and see how this overarching macroeconomic weather is directly impacting the cryptocurrency markets, because this is where the plot really thickens. According to the analysis, Bitcoin and the broader crypto market have basically just woken up from a 6-month summer hibernation. And it has not been a smooth ride. Just recently, in June of 2026, the market suffered some severe drops, what the author jokingly calls scrapes, that left investors trembling on their sun loungers. But then, the momentum dramatically shifted. Here in this warm month of July, for the first time in half a year, Bitcoin bounced back with enough force to completely erase all of those severe June losses. The asset is officially looking upwards again.
So why the sudden aggressive recovery right now? Well, the author argues it all comes right back to that inflation data we were just talking about. It's all about the promise of cheaper money. Think about it. If inflation is genuinely giving the economy a truce, central banks don't have a valid excuse anymore to keep choking the economy with high interest rates. When people and institutions realize this, they immediately start anticipating that rates will drop soon. And lower rates mean more money circulating out there. When there is excess liquidity in the air, that money aggressively seeks out assets with high growth potential, assets exactly like Bitcoin.
What's fascinating is how the source categorizes this specific Bitcoin recovery by contrasting two totally different types of market movements. Historically, we have seen Bitcoin shoot up like a fairground rocket, a wild, completely reckless, speculative spike that usually ends in a fiery crash. But the author notes this July recovery is completely different. It's a slow burn, or as they say, a fuego lento. It's steady, it's firm, and it is so much healthier. Why? Because this slow burn tells us that smart, institutional capital is entering the market logically and strategically, rather than just retail investors blindly piling in out of pure wild speculation.
Section 3. Packing your cooler, the golden financial rule. Let's get to the most actionable part of the analysis and see how all this macro data directly applies to your own personal finances. The author takes a step back from all the charts and graphs here and delivers a pretty blunt warning. A slight financial breather in the economy absolutely should not be wasted on buying extra mojitos at the beach. Instead, they lay down a golden financial rule. Nobody, and I mean nobody, can build an empire or invest successfully if they don't first know how to control the petty cash of their own household. It is a straight-up call for strict financial hygiene. Before you get caught up in the hype of Bitcoin's recovery, you have got to ensure your own financial foundation is rock solid. So how do we do that? The source outlines 3 critical, non-negotiable steps you've got to take before you even think about putting a single euro into crypto. First, clear out your expensive debts. Pay off those dragging credit cards and high-interest loans. Second, build a safety cushion. Tuck away enough money in a quiet, boring, safe account to cover 3 to 6 months of your actual living expenses. And third, learn the basics. The author really stresses this. The only real difference between the folks who lose their shirts in crypto and the ones who actually build long-term wealth, it's just knowledge. We're going to wrap up this explainer with the author's really provocative final thought. Are we standing at the starting line of the ultimate, definitive crypto bull cycle? Well, the author advises us to just stay calm on our sun loungers for a minute. Yes, Bitcoin recovering its June losses is an incredibly excellent sign of market health. It shows a real desire to push upward. But as we've seen, economic wins can change direction incredibly fast. The big takeaway here? Use this summer breather to educate yourself. Analyze the market without rushing, get your household finances in perfect order, and prepare your strategy with a cool head. Until that next big economic wave hits, stay prepared and keep learning.